You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
So welcome again. Thank you for staying after lunch. I know it's hard, but I hope some of you had a coffee, so you're ready to go. So today we have a rather interesting workshop for today, and I think that the idea of it is that there are no straight answers, right? Everything is still happening as we go along. There are different things going on, but we want to get a sense from the panel today about their experiences, the cultural difference, what is it like when they actually have work in China, what's their success, what's the model. I'm guessing in this room, even a lot of you have different types of experience. So the idea is if you have anything to share or if you have any questions you want to ask, feel free to ask. There's a small enough group for us to ask, but that's the idea of it. So before we start, I just wanted to give a little bit of background. Okay. So here is a fun comparison, just to think about the whole idea of China versus US, okay? And I can't see my own slides, so I'll look at it here. So if you think about it, economy, America now is number 1. China now is number 2, predicted to be number 1 by 2020 in by IMF. Presidency and politics, Trump right now. Longest time ever for any presidency is 2 terms, right? I think there was one president that was more than that, because I just went to the museum. And for China, it's actually forever, right, until he's dead, because he made his own rules and he said, okay, I'm forever. So you think about it that way, and it's one government. Population, America has 325 million, China has 1.3 billion. How old is America? America is very proud, 242 years old. But if you hear China people talking, they always talk about their 5,000 years of history and 5,000 years of civilization, okay? So again, this is not an exhaustive list, but just background, right? Because whenever we talk about these things, we need to think of it in different lens, right? Culture. So the culture of America is about individual freedom, protecting the rights, meritocracy. China is really seen almost as a selfish thing in a collective society. And the state is controlling, right, the culture. The debt, so this one, you hear it all the time in the news, right? 14.1 trillion debt, but actually only 1.17 trillion is that China is buying the debt. So it's not as big as you think it would be. And then China also has debt, actually, 4.3 trillion. Okay. So just, again, some ideas or just background, and we could after that ask the panel about it. So what's happening now? So there is, like earlier we heard the panel talking about the tariff, right? The tariff wars. So now, as it stands, it's 200 billion that US is imposing on, and then China is doing the tit for tat for 60 billion. I think they would like to have it for 200 billion, but they can't really, there's not enough products in US to stop that, to have 200 billion. So that's the war right now. I don't think this is a temporary thing. I think this is a long war because China is trying to have its birthright to be number one, right? Another interesting story, so I remember when I was first working, I had a colleague from China, and I was looking through a map, and he looked at my map, and he said, hey, your map is wrong. Like, it's wrong. And I'm like, what do you mean it's wrong? This is the map. And he's like, no, our maps are completely different. And the map I mean, the normal map you see is, you know, there's this bit here, this bit here, this bit here, right? But the map in China, I think it's still like that in China. China is the middle, right? China is the middle kingdom. China is Zhongguo. China is the center of the world, right? So that is the perspective, okay? And then there's other things right now. The South China Sea, there are people, China has built a huge base there. US is coming in to say, hey, you don't own it. And there's lots of people there. It's very, very crowded, that area. And what does that mean, right? The third thing interesting happening is, that's hardly talked about right now, is that one belt, one thing, whereby there's a whole ambitious plan by what year? 2025 or 50, to really have this huge belt across different countries. And again, that is a very interesting thing, whereby a lot of the countries now are in debt to China because China is lending a lot of money to build all the infrastructures for that to happen, right? So there is things happening. Okay, so without further ado, just to give you the background, I'd like each of you to introduce yourselves, what you do, and yeah, let's start from there. Okay, so.
Sure, my name is Jay Burns. I am currently a senior manager at TD Ameritrade. I manage the active trader, I manage compliance for the active trader segment, which includes TD Ameritrade Futures and Forex LLC. I was previously the chief compliance officer at Watai Financial USA, and I spent the early part of my career as an associate director of compliance at R.J. O'Brien & Associates.
My name is Matt Bradford. I'm with RCM Alternatives. I've been in the industry for about 17 years, wearing a variety of different hats. I ran my own CTA for a brief period, ran my own IB, and I've been with RCM for about 8 years now. I'll let Bobby explain a little bit about RCM so you don't have to hear it twice.
Bobby Schwartz, I'm the managing partner at RCM. We are based in Chicago. The best way to describe us is we're in asset management, quantitative technology, and multi-asset class brokerage firm. We focus on two subsets of clients, one being all things traders, and the other thing being all things investors. And that goes up the food chain from ultra high net worth to sovereign-based funds, and traders being high frequency PTG type traders to CTAs, hedge funds, mutual funds, and UCITS products. So. And we have 7 offices throughout the world. Most recently, we launched an office in Shanghai August 1st.
Okay, so let's go from big to small, right? So the first one is about the trade deficit. What are your thoughts about it? How do you think it will affect the markets? Yeah, just anything about, thoughts about that. So whoever wants to.
I mean, I guess I'll defer the economy talk to Bobby and Matt, but you know, I can't imagine that any trade deficit or trade war is going to help make the CSRC in China more. It's not going to incentivize them to open up their markets to foreign participants, particularly Western participants, U.S. traders. You know, I don't think it's a good thing for U.S. customers trying to access local Chinese markets.
Yeah, I mean, I would say that what's great about the trade war in China in general is the inefficiency that currently exists in China, as well as it creates great volatility. And as a trader, you got to love vol. The problem is, just like Jay was saying, is how do you access it? It's become incredibly difficult for foreign entities to get approved there. As a matter of fact, there's a full stoppage of WOFIs being created right now, whether you're let's say a foreign entity or even a Chinese national. It's very tough to get done. You actually have to buy them over, so therefore it makes it very difficult to get started over there. Depending on whether you want to be a prop-based trader or you want to be a fund, you want to get money in or out of China, it's very difficult. And what I would tell you is that the process for RCM, we've been at it for about 2 years now. And we've made some great strides. We're trading 3 strategies over there, but it's taken a tremendous amount of time, a tremendous amount of money, as well as hiring Chinese nationals, bringing them to the U.S., training them for what we want, and then bringing them back to China. So it's definitely very difficult in this current environment. I don't see it getting any better anytime soon. And even more so with the uncertainty, what's going on with the trade wars, even if you were to get going over there, getting money out of China, we still don't know how that's going to work, and we're expecting to take a dividend type payment in December. So.
Okay, so maybe for the sake of the audience, for you guys, I'll be short. What was the thing that means? How did you? Can you maybe explain your journey into China? Like, how do you even start that journey to go into China? You know, because many of the traders, they're always asking how to get in China, how to get in China, right? But that question somehow has faded over the last couple of years because it's been so difficult, right? But what was your journey like?
Sure. For us as RCM, because we're providing so many different services to different client segments, we knew we wanted to get involved. To remain competitive in the marketplace and be very progressive and be a thought leader in the space, but also because we saw the opportunity. About 2 years ago, we started doing initial research, and we realized that in order to do it properly, after having many calls and meeting with a lot of different people, we were asking a lot of the wrong questions. And there was also a massive cultural divide. So what we did was we wound up hiring a Chinese national, and that helped us that helped us figure out exactly, what questions to ask, but also start communicating the right way with China and figuring out, here's the way you should be speaking versus not speaking as far as lingo and just general customs and practices over there. From that point, we wound up meeting with many different attorneys and accountants over there, and ultimately we wound up filing for a WOFI, which allowed us to conduct certain type of business over there. And we're licensed for, what, about 17 different business lines over in China right now. And the goal for us was to replicate what we had done here in the US and Europe and bring CTA or trading strategies, even PTG or prop-based strategies over to China. And instead of getting the money out of China, figure out how to raise money within China, trading the Chinese markets. And we felt that that was the least path of resistance to actually going off and creating what we have done in China. And so that's where we're currently at.
So I've got 2 questions to ask you for that. So one is, what do you mean by the wrong questions? I mean, what was examples of the wrong questions you asked, and what were the right questions? And then the second question is, how's your success so far for raising the money?
So I'll take the success part, and then Matt can answer a lot of the wrong and right questions, because I can tell you we've asked hundreds of thousands, and only when you think you've figured it out, you really haven't. And the goal for us by the end of the year is to have 8 strategies sending signals to different asset managers over in China. And what do I mean by asset manager? You have to have something called a PFM license in order to properly trade over there. Us as a foreign entity, we're not allowed to do that. We're allowed to send signals of which the asset manager can decide at that time to trigger those signals or not to trigger those signals. Meaning, if they decide to send the signals to the marketplace, that's them, and we get paid for those signals. Our goal: we have 3 strategies launched thus far. They're doing, I think, very well. And by the end of the year, we anticipate having not tons of AUM, but probably 8 strategies with about 30 million AUM USD. So, Matt, you want to talk about some of the questions and some of the trouble?
Yeah, I mean, I think the biggest challenge is, I mean, there's a handful of them, but the low-hanging fruit is the time change. You know, there's a 13-hour time difference between China, so you're, doing a lot of this work first thing in the morning, late in the evening. There's the language barrier, so you may ask the right question, but it gets translated improperly. Culturally, a lot of the business likes to be done in person, and we're in Chicago, they're in Shanghai, Beijing, Hangzhou, or wherever they are in China. I don't think we knew we were asking the wrong question, but the common mistake or the advice I would give to anyone that's looking to do business in China is don't assume that what works in the U.S. is going to work in China. It's not going to work. Conventional wisdom would say, hey, it works in the U.S., it's going to work elsewhere. It's going to take twice as long, maybe 3 times as long as how long you think it's going to take, and it's going to cost a lot more money.
Just to give you an example, not to cut you off, but we have 7 people that are working on this at our office. 7 people, and that's not including the guy that we have on the ground in China, and let alone the other consultants we have in China, or the 2 different law firms, or the 2 different accounting firms. You have to be prepared to go in and not make money for 2 years, 3 years, whatever it is, and you're going to have to fail a lot. And it's expensive. It's a lot of man hours, and you just have to make sure you keep on being, go after it and be steady with your process.
Okay. Yeah, go ahead.
I would just add to that, from my experience at FCMs, I've always underestimated the time and commitment that you need to actually access these markets and give your clients a good onboarding experience and trading experience. When you think you got regulatory requirements in a foreign market or jurisdiction covered, then you have other regulatory requirements in your home jurisdiction with the NFA or CFTC pop up. So you're always kind of playing catch up, and it's difficult to satisfy both of them at the same time all the time.
And Lynette, just to add one thing.
Yep.
One of the most, I'd say the early outlier questions which really boggled my mind was, great, well, we can just trade. We can go off and if we figured out we had this license and we found an asset manager, we're going to send the signals, we can just trade. But the reality of it is there's only 4 order types over there. So how do you trade based on those order types? And then I've been over there for a total of a month and change over there this year. Matt's been over there for 2 weeks. There is the amount, when you go over there and you meet with these asset managers, you're like, great, we're ready to go. They have an execution team, and you go do the on-site due diligence, whatever it is. You realize you're going to everybody's going to get a punch-out number. And what we mean by that is you're going to get stopped out. Let's say they give you 5 million USD equivalent to start trading. If you're down, let's call it 10%, 500,000, the strategy's done. It's that simple. You're done. That's the way it works. You move on to the next one. But if you don't have the right execution system in place, then you're going to have that in just pure slippage through execution errors straight away. So what we had to do, which took us an extra 6 months, is we learned the different front ends or ISVs that currently exist in China, the most popular ones that all these asset managers used, and we took our internal OMS from our 24-hour desk and we adapted it and wrote into the front ends so that the logic sits in the middle. And so therefore, U.S. or foreign CTAs or managers or prop can trade the way they traditionally do, whether it be using OCOs, OTOs, whatever it may be, and then the logic inside the OMS that sits in China then sends the flow through the asset management license to the exchanges. And I can tell you, because everything's written in Mandarin, it is a giant pain, and it's a huge undertaking. And we had to hire an extra 3 people to help with that just alone, and that was very expensive. So you have to be dedicated. And if you think you're just going to go off and start shooting orders there, you're highly mistaken.
Yeah, I appreciate you sharing so frankly about your experiences, so that we can kind of all learn from it, right? And I like what you said. Nothing is always as easy as it seems. Everything kind of always takes longer than what it appears. So for John, maybe you can explain a bit more what you did when you were in Huatai, and what was the relationship that you did between China and US, and what was the different things that you faced?
Right, so most of my experience is working with US FCMs. I went to Huatai because the opportunity in China is big and it's there. So when I was at Huatai, we were gearing up to offer east to west client trading and west to east client trading. So clients trading from the US on Chinese exchanges, Chinese clients in China trading from China on US exchanges. Being an NFA member and under the regulatory obligations of the CFTC, it's difficult. It's not unachievable. Firms are doing it. Several firms have done it. It's just there's a lot of hurdles you got to get over, and that's even before you encounter cultural language issues, which fortunately I had a good Chinese-speaking native Chinese support team. Firms like Bobby, they had to go hire it, and they had to source that. Huatai is a large securities broker based in China. They have a large FCM in China. So the U.S. affiliate had all the resources in China that you could probably ask for, and it's still difficult, and it's a long process that you really, like Bobby said, have to be committed to.
Okay. So in all your experiences, what was the most unexpected lesson that you learned? Like you didn't think you would learn it, but you learned it.
So many. Go ahead.
Yeah, I mean.
Okay, you can do more than one if you want.
I'm going to steal Bobby's because I know this is top on his mind, is contract and deal negotiation. You're not meeting in the middle. If you want to land here, start way over here. And once you think you have a deal, that's not the deal you get. So just be cognizant of that and know that going in. And it's helped us because early on, when we started, communicating with all these groups, we, how business is done, at least in the U.S. And, when you have been in this business, it's a very small industry. Maybe there's a handshake and, eventually a deal gets inked, but you're going to stick to your word. And my experience is that's just not the way contract negotiations happen.
Yeah, I would obviously, I agree. But, as far as, you have to understand who you're doing business with over there. So let's say you're working with a PFM license or an asset manager over there, because they're the ones that have the proper license in which enables you to trade or allows them to trade based on your signals. You want to understand what are their capabilities and how are they going to help you grow. And what I would say early on mistakes, we were so eager to just get a deal done and meet with these asset managers that we forgot about the values and the deal points and the value that we bring to the table. And therefore, we started to negotiate, and on the first deal, we realized, what are we doing? We're almost negotiating against ourselves just to get the deal done. And you have to stick to what you know, and sometimes it's just not going to work. I mean, we've had over 60 different asset management meetings over there. Almost met with every FCM. I can, the CSR, I mean, you name it, we've met with them over there. And we've had a great team. And it's just like if you call CME or ICE or whoever it is, or the NFA, or we love the NFA if they're here, is that if you call there 10 times, you're going to get 10 different answers. And it's very similar over there. So it's very tough to get an actual contract done. And you just have to just stay at it. What we think is going to take a week has taken us 3 months on any one agreement. So, and minimum. So.
So yeah, I think I like the fact about the difference in the culture, right? So I think one is America, again, not kind of stereotyping it, but never mind. But the idea is, yeah, you get a deal done, go, right? This is what I say I'll do. I think you think about China, it has 5,000 years of history. So what is 1 month? What is 1 year? What is 3 years delay? Not a big deal, right? I mean, it's 5,000 years compared, right, to a quarter earnings, right?
And part of the negotiating tactic on their part is to try to elongate the process where you get frustrated and you just start caving in. And I can tell you the experiences we've had there have been phenomenal. The people are absolutely great people. They have been so gracious to us, and they've been relatively good to work with. Would I put my IP on their servers? No. Would I not have secondary or shadow accounting and legal and everything else? No. You have to have that. That's just good business. And that's just keeping the checks and balances in place. But I can tell you the experiences in general has been phenomenal.
So alluding to the fact, what is the good thing that you feel that has come out of, working with, basically a different culture, right? What has been a good, surprising thing?
I mean, the opportunity, as you stated, the opportunity is there. The markets are ripe. It's, we draw the analogy that it's similar to the commodities market in the late 80s or 90s. So, it's our intention to bring managers that exploited the markets and did very well trading in the 80s and 90s. We think that they can be very successful and extract alpha from the markets over the next 5, 10, 15 years.
Let me put it in a different perspective. So if you look at the current marketplace over there, you've got the stock market that's down, what, 40%, 30%, and then, the real estate market's getting crushed. There's a lot of vol, there's a lot of uncertainty. The way wealth management used to be done over there is you would sit there and find a broker, whether it be a futures broker or equities broker, whatever it is, and if you had $1 million, you gave them $1 million, and you kind of just, you go with it. They're years behind us from a westernized perspective, and I can tell you they're adapting very fast, and they're learning very fast, and they want to adapt and become more efficient. But one thing I've learned, which everybody's always saying you got to be really worried about the Chinese about stealing IP or this and the other. Yes, you got to worry about that, but they are also pretty adamant about making sure that they know that they're a very good global marketplace, and that they are going to be a very good global marketplace in the next 5 to 7 years, and they want you to feel secure about that. And I can tell you, we do. I mean, we're over there for the long haul. We've committed to it, and I know we're first to market with what we do, but it takes a lot of time, a lot of money, a lot of terrible questions, and it's a toasting culture. So you got to go over there and you got to be in front of them, and you got to have a lot of fun with them and get to know them. And maybe if they really like you, they'll take you to karaoke. So that's where it goes downhill from there.
Yeah, you need to drink a lot and hear a lot of out-of-tune songs. So.
I mean, for me in a compliance position, the opportunity to really learn from them and then educate them also on U.S. regulatory requirements and educate our clients on U.S. regulatory requirements is, it's been a tremendous experience. There's not a lot of people I can say that have the same experience, maybe a handful that are working in the U.S. with Chinese FCMs, with U.S. FCMs, with Chinese clients, with U.S. clients trying to trade in China. So for me, I'm really on the ground floor of a potentially large new area of compliance management.
I know we've all mentioned it, but I think it's very important where Jay mentioned east to west and west to east, and Bobby said, global vision. What we've tried to identify as partners that have that global vision and want to collaborate with us east to west and west to east, because I think that's very vital where it's mutually beneficial.
I mean, I think one of the themes of this panel is going to be that you really need, it's critical that you partner with quality FCMs like Phillip and Watai and IBs like RCM who have the adequate compliance, legal resources, who have the experience. It's going to be very difficult to go at it on your own or try to pave the road yourself.
What I think we've, and I completely agree with you, Jay. I mean, what we've learned, or dealing with some of the larger CTAs that are out there that are some good household names that have 3 to 10 billion under management, whatever it is that everybody wants to be in China. It's a phenomenal opportunity, and it's okay to take less to get the access to the opportunity and learn for a couple years and whatnot and partner, because you always have your core business, and it's going to be probably good 3 to 5 years for everything to evolve there. And even though there are markets opening up and what they have, oil, crude, and iron ore, and a couple others. There's still the uncertainty of how do you get your money, if you were to sit there and invest, how do you get your money out if you are trading over there? How do carrying brokers work? If you are a CTA and you're trading over there, well, and you have multiple kind of SMAs or whatever it may be, or as they call it, funds within a PFM license, how do you do the allocation? It doesn't exist over there. None of that exists. So you have to, and we didn't realize that. We were saying, what are you talking about? This is crazy. Why don't we just do X, Y, and Z? And they're like, we don't know what that means. And that was talking to some of the FCMs. So it's a lot of trial and error, and I think the environment is going to open up over the next 5 to 7 years, but not as what everybody thinks. I don't think it's going to be as easy just to go trade and get accounts going. We know a lot of prop groups that are over there. We've met with guys that are now running their Chinese nationals that move back, that work for Jump or former Citadel or whoever it may be. And they were high-frequency-based traders here in the U.S. High frequency to them is 5 to 7 days, right? So turnover. So it's just a different mindset. And
okay. On that topic, what do you think is what is it on the ground like, the investment appetite in China? And do you think because of the recent trade tariffs that will change?
So if you're a trader, let's talk about it from a CTA or fund perspective, trying to go raise money over in China, right? The returns are out of control over there. If you're not putting up 20% returns and whatnot, you're just not competitive, and you got to find someone to seed you. You got to trust that group and have contraction done. And you're going to have to put in the game. You're going to be in the game for 3 to 5 years before those CTAs come out of they start not performing, and you have an opportunity. So you have to be patient, but you got to have good returns. I mean, it's a volatile marketplace. So in order to be competitive, you got to be putting up plus 20% returns.
How the market differs too is, although they're not, I mean, there is some risk aversion there, but they've made a lot of money in private equity, they made a lot of money in real estate, they made a lot of money in their stock market. Now, the chickens come into roost a little, where their stock market's down, property prices are down, private equity is peaked, so they are looking, there is an appetite for alternatives. But when we started down this path, to Bobby's point, they're like, we need a too sharp, less than 5% drawdown, 20% return, and like we put the phone on mute, and we're like, so do we, but you have to be realistic. So the mandates that we're getting now are a little bit more realistic, being some of the other asset classes where the money was at work is not performing.
Okay. What is the one mistake now looking back that you wish you didn't make?
I mean, we've said it a few times, but just underestimating the time it takes to get to market.
Okay, time.
Time and commitment. You really want to be transparent and open with all your partners about potential cost overruns, delays in operational infrastructure setup, trading platform setup, trade reporting requirements. There's just setup in general. It's hard to put a firm time frame on that.
I completely agree. For us, the firms Jay's worked for, they're huge, right? You guys are a big business, right? We're a team of 75 people, and while we have a good back and middle office infrastructure, we have a really solid, redundant team. We have literally 7 people working on this as part of our 75-man group, and for a couple people it's full-time, a couple people it's part-time. And then we have people on the ground in China. So it's far more expensive from my perspective than I ever thought. And it's taken a tremendous amount of time. And, you think about the man hours of these 7 people, plus, what we're paying them. And now I'm speaking for myself as, just the partner.
Not enough.
Not enough, yeah. Not enough, of course.
I mean, if you think about every third-party trading platform you could use to trade U.S. markets, there's got to be, 30 plus, 40 plus, maybe that might even be conservative. Yeah. Lynette, correct me if I'm wrong, there's only 2 that you can use to trade Chinese domestic markets.
eSunny and CQG, yeah.
So, I mean, there's a lot of adaptation that's going to require for U.S. or foreign-based traders to trade Chinese domestic markets. You have to get used to those platforms. If you're a TT trader, say, now you if you want to trade those markets, you have to trade CQG or eSunny,
and even CQG is really
right. And they're both. eSunny is new to the U.S. market, and CQG is new to the Chinese market. So there's definitely going to be a steep learning curve there for both those technology companies.
I mean, we go through different platforms in those that are more, I would say, native, because they had built-in risk protocols and whatnot, which also a majority of the asset managers versus, let's say, traders would use. It was certainly challenging figuring out how to deal with those guys and getting them on the phone and trying to work. You know, Matt spends most of the time at night, probably from 10 to 1 to 2 every night, talking with China. It's been a lot of work.
What is your next current challenge, and what are your goals for China?
So I mean, my goal has always been to provide a superior client experience as far as onboarding, trading. Right now, in my current position at TD, we're not in foreign markets, so TD does have a Hong Kong affiliate, TD Hong Kong, and TD Singapore, which are offering access to U.S. markets to local clients. You know, I'm still relatively new there, so I haven't been involved with those teams as much as I'd like to be, but I envision myself getting more involved with them and playing a bigger role in their bringing clients from Singapore and Hong Kong to U.S. markets. You know, we're partnering with top technology firms like Amazon Alexa. You can trade TD. You know, if you ask Amazon Alexa, tell me what Google is, it's powered by TD. So Amazon, WeChat, Facebook, you can trade through Facebook now. WeChat in Hong Kong, you'll be able to open client accounts on your phone. Basically, there's a TD mobile app for WeChat. I don't necessarily know what the timeline is on being able to trade through those applications, but you know, TD is definitely on the forefront of technology, especially in Asia.
Yeah, I'd say for RCM, our goal, we've launched 3 strategies. We'll have 5 more by the end of the year. We've narrowed down the PFM licenses that we're working with based on certain criteria in which we've learned over the last 2 years of what we're looking for from a global partner with the vision. We are building out, we have an algo suite, which is microstructure execution group inside of RCM that we're building into China over the next year or so, and we're right now in the process of discussing with technology partners there. And we're also working with different FCMs and asset managers that have business based in Hong Kong that are looking to go east to west as well. We're facilitating the business either through our futures arm or our securities arm or our outsourced fund arm to facilitate their needs here in the US and Europe.
And then you mentioned about protecting the IP rights, right? So what are the practical things that you have done or tips when people are trying to go into China to how do they protect that part? It may not even be IP rights per se, but even a way of doing something, right? Like you mentioned allocation of trades. That's something that we all know here, but something very unfamiliar to China, sorry.
Yeah, I mean, especially this is one primary concern that the strategies that want to access the markets, it's one of their first questions. So what we were able to do is our OMS that we've been using here in the United States for probably a decade or so, we actually have our OMS, as Bobby said, written in English, but converted and written into the 2 ISVs. And it sits on servers in Beijing and Shanghai, and all the strategies that are trading on the Chinese markets has to utilize our OMS, and we have encryptions on there where, you know, it's protected through our OMS for all the trade flow going in and then the trade confirmation going out as well.
I mean, TD being a large firm, they're not even in China proper. We're only in Hong Kong and Singapore, but I mean, the primary operations are run out of the U.S. in Omaha and South Lake, Texas. I mean, it's a 10,000 person firm, so there's whole information security management teams, which are way above my head. But I'm confident that it's well protected.
There's no doubt.
And as you, so as you are, like you said, when you go into China, you need to, hire native Chinese people. How do you find people that share your values or don't screw up, right? How do you manage that, or it's a risk?
So one of the things that we have at RCM is we have a university program where we provide our technology and infrastructure to 6 different universities for their Masters of Finance computer programs, which happen to be at University of Illinois, UCLA, Northwestern. 60+% of these students are Chinese. So we've been able to draw some good talent from there. And also through other university programs that we've reached out to, and we brought people in that had certain master's degrees that we are interested in, and that's how we wound up hiring our guy that's currently on the ground for us in China, and it's worked out really well for us. The universities have been key for us.
To train them from
to train them, and also to help out, whether it be translation services or working on different things for us. Yeah, they've been very good, and
Okay.
they're phenomenal students.
So I think one thing just to highlight about this workshop and everything, and is to say that really you cannot ignore China, right? It's complicated, it's difficult, as you hear from, but you can't ignore China. Whether it's in the products you can't ignore it, and it will be a force. It is a force to be reckoned with. It will be a force to be reckoned with, and you have to think, if really in 2025 or 2050 China is going to be #1 economy, what does that mean for U.S., right? What does it mean for us? Is there a shared power? Is it different, right? And this is an important thing. So if this is the case. Sorry? If this is the case, what is the first steps do you think people can take? The first steps to trade?
I mean, I can't emphasize enough the need to partner with good vendors and service providers that you can trust and rely on, and that have the resources to provide adequate legal and compliance support. I've never seen, or I don't know what regulatory action from CSRC would look like, and I prefer not to find out, and I'm sure U.S.-based traders would as well. There's enough considerations that they have to take into account from a U.S. regulatory perspective, most, unless you're an independent trader, most being NFA members. And the regulatory regimes are complex and constantly changing, so it's just you need to find good partners.
Absolutely. I mean, I don't know if many people know, but Citadel was over there, and we heard this time and time again from the different lawyers and accountants that we met with and other asset managers. They went over there and they were banned, and it was very simple. The CSRC just said one day, "Okay, you're done." And that's the way it works over there. And so you just have to be very careful. And to Jay's point, when we first started, we were certainly on a budget, and we probably hired the wrong vendors. And we had to go back, and it wound up costing us twice as much to get the right vendors in place that knew how to help us navigate the space. And I can tell you it's been unbelievably helpful. But you just have to have the right budget to do it. And if you don't, then it might not be time yet. But if you do, like Jay says, you gotta have the right vendors.
I guess for me also the other alternative that you could do is you could trade in the other Asian exchanges that offer products proxy to it, right? So it's either SGX that has the A50 or Hong Kong exchange. Both have these index futures that you could trade that mimics the product, and at least get your feet wet a little to see how it works. I think that would be a good, nice little step in the right direction. So now we have about 15 minutes more, and I'm open to questions or sharing. Yep, go ahead. feedback, ideas.
Hi. I actually had a question on market data. Are there any market data regulations? Can we get the data into, let's say, CME and we can trade off of that, or what are the rules like?
So this is, we're going to be careful how we answer this.
There's ways to get it.
There's ways to get it.
It depends on how granular you want to get. There's been some groups that, and how clean you need the data to be, but there's ways to get historical data going back 5 to 10 years, whether it be hourly bars or 5-minute bars. The bigger challenge is, getting the live data. You're going to pay up for that, but I mean, you can get it from Bloomberg to get live data. The historic data, I assume, is what you're talking about. A little bit more of a challenge, but there's ways you can get it. Leave it at that.
Sorry for being big.
So we hear about the tariffs all the time on the news every night, right? What are the people in China on the ground saying? And secondly, do you have any concern, because mathematically they can't go toe-to-toe with us, that they're going to crank up their regulation, what's going to make it very difficult for you to do business and potentially withdraw?
I can tell you this. So we're going into this hoping that we can do and continue the way we are operating, right? So we could get an opinion letter and whatever else from different law firms over there that say we're playing within, we're coloring within the lines. It doesn't mean that we're going to be able to get the money out. That's one thing, and we're very honest and open about that, and that's a risk we're taking. We know that if, like, for example, there are no more Wolfies being opened up right now. It's shut down. It's because we want more and more, and we're willing to pay up to go get them done. And we were in the process of actually getting our PFM license, which would be, one of the only firms, foreign entities to have it. And while we were conditionally approved by the CSRC, that is now done. So that's a big challenge. We don't know what's going to happen. We're hoping for the best. We're taking every precaution. But, from my perspective as a business owner, I know that we could be spending a lot of money and spinning our wheels. But I'm confident that if we can't get the money out in the next 2 years or year, which we'll know by the end of the year because we're going to get a dividend payment, then we're happy to have the money sit in China, and then we can redeploy it into other strategies within China, which are really doing very well. So we're happy to do that as well. So it's a longer game, and you got to hope for the best right now, but you have no control, over what the regulators are going to do. So, and by the way, if you're doing something so they don't play nice with each other there. So an asset manager, if they think you're having more edge than, let's say, another asset manager, they will call the CSRC on you and say that guy's doing something illegal. That's all it takes. That's all it takes, and you're done. So you got to be very careful. I ran into more people that were worth a tremendous amount of money. We got invited to their homes, and these are $25 million homes, and I'm not joking, $25 million homes, and they're wearing sweatpants, ripped t-shirts. I'm like, what the hell is going on here? This is insane. And they say you got to keep a very low-key profile. They don't do anything. They buy real estate. That's what they do. They might go on a nice vacation and fly business class. They don't spend any money. They keep it very low profile. So, I mean, if they're doing that, we should be doing the same.
I was talking to Hua Tai. The president came yesterday to pay us a visit, and I was just telling him about, the regulations here are really difficult. SEC is hard. And then he's like, you can't compare to China. And I'm like, that's true, because they will crack down, and the penalty might be death. It's not you go to jail. So it's a different, it's like, okay, now I'm in the US, I'm paying lots of lawyers, but it's a different standard, right? So imagine that kind of differences in there.
I think the head of Trader Citadel that Bobby was referring to couldn't go back to China. I think he was facing jail, right?
Yeah.
I think that's public. You can look that up if you're interested.
Any more questions or thoughts?
Yeah, I mean, I would just say this: we encourage you guys, to come up and contact us at RCM, or I'm sure Jay's got a lot of thoughts on it, or Lynette. I'm sure you have probably more experience than all of us. So, we're happy to discuss it with you, and get more granular as far as some of the details and around.
Yeah, I think also just a thought with regards to the tariffs and all that, like you highlighted, and there's a lot of worry about what's going on. Really, if you look at China's perspective and on their point of view, right, they want to open up markets, right? That's their view. They're not in that phase of like, let's protect our market, let's protect them. No, they're actually the opposite almost of US. They're like, no, we want to open up. But it takes time, right? It takes time. It's a big country. It's top-down style. So things just take a very, very long time. But that is their goal. So I think no matter what it is, and then there's another value system that's very unique to Asian cultures, I guess, and that's the loss of face, right? Face is a very important value system in the Asian cultures. And because if you think about it, very simple thinking of how the China government will respond in terms of whatever conflict that happens, they don't want to lose face. They don't want to lose face to their people. They don't want to lose face to what they promised the people. So therefore, they'll do everything to make sure that the economy is stable, right, at all cost. So think of it that way, and yeah, that would be the thing. Yeah, so that's. Any more things you? Yeah, Joe.
Just a couple of fun takeaways that are kind of on point with what you guys are talking about. So I have been setting up little Chinese-based FCMs here for 6 years in Chicago. We have a thing called Law and Order here. We talk about it in the U.S., Law and Order. It's even a TV show, Law and Order. You deal with the Chinese, because they have such a big population to manage, and they look at it the reverse. They look at it as order first, and then we'll sort out the law. And that's sort of a real quick thinking way to kind of approach your dealings with them, and sometimes. One of the other ones, well, I'll leave it at that. It was kind of fun conversation I had with some Chinese regulators.
So order first before the law, or make up the law as we go along, right? But order first.
We'll address it, not necessarily make it up, but we'll address it.
Yeah, okay. Okay, thanks. Oh, sorry, one more.
Do you guys have any update or progress on the Chinese free trading zone? I think they mentioned a couple of years ago. INA just launched this year. Do you think the Chinese government will open up the more market to the free trading zone that you can put the money in and out at a certain limit?
Well, I mean, we're registered in a free trade zone.
Yeah, and our lawyers told us what region of the country you wanted to register, and they specifically said register in the Pudong district, and that's where we were told to register. What the logic was there, I mean, I don't think it's as easy as getting money in or out, but that's what we were advised to do by counsel in China.
There were only two places there, and in Shenzhen,
which was also a free trade zone.
Free trade zone, and but it doesn't mean you can get money in and out. Not from that perspective. It certainly doesn't make it any easier. You know, your account, you got to make sure whoever your accountants are, who are going to be going to the tax authorities on your behalf, they have a good relationship with the tax authorities. And if one of them has a falling out, you're screwed. You're done. You're getting extra 10% tax, and you may not be getting your money out. That's one. We had an accounting firm, just to give you a perspective, that quit on us because they fired us as a client. This was early on because they ultimately did not. They had a falling out with the local tax lawyer. They said we can no longer help you. So,
I mean, I think the tone of the panel's been like it's very difficult to do, but it's possible. Your fastest to market way for like a self-directed trader, an individual trader, would be to partner with an FCM that has a clearing member partner in China. If you're looking to trade the two currently available Chinese contracts, the INE crude oil and the DC iron ore, that's going to be your fastest way to market there. Now, if you're looking for more advanced strategies or asset management capabilities, then like Bobby's team is doing, it takes a lot more time and commitment, boots on the ground type of work.
Also, it reminds me, just to add, the quite a difference also when we came. I came from Singapore to come here and set up the FCM, and the difference was interesting, was that where in Asian countries, the licenses that are given out are controlled, right, by the government for whatever licenses. So even the licenses are valuable and worth a lot, right? So there are even FCMs in China who gotten extra licenses and can sell that licenses because they got it first, right? So, and whereas in the US, you have the right capital, you hire the right people, you could just do it, right, and set up FCM, which is what we did. But so bear in mind that like what he's saying about the licenses is an important element to doing business in Asia and getting the right licenses for whatever that takes, right? Okay, thank you for everyone. Again, we're here, and like I said, the room has lots of different experiences from China, so feel free to share about it. We will be having a fun kind of lucky draw and coffee and tea and more dessert. So thanks again, and thank you for your honest sharing and sharing experiences.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.